Hello and welcome to Woody's Weekly Wisdom episode number 18. And this week there's again so much to talk about, but I want to talk about something with a little bit of positivity. So as I was scouring across different pieces of media that I look at to determine what I'm going to talk about today, it was interesting to see so many of the headlines that we've been talking about a lot on these weekly wisdom calls, and it's really interesting that they just keep coming up, but they're starting to contradict each other. So you'll recall that for a long time that we were talking about how in Australia in particular, the experts were predicting that the property market was going to, had its falls and had started to correct itself and increased in the first quarter. And a lot of the headlines were about how the property market was so strong and was going to continue rising. And today I was just doing some scouring of the different sites I look at to bring you these stories to help you understand why listening to and getting caught up with what you're hearing in the media is problematic. And suddenly there's all these headlines. So there's, for my Australian listeners, there was Mark Boris talking about the potential for the property market crash to be worse than the global financial crisis. And then a guy called Matt Barry, who most people won't know, but he's made a lot of money in the freelancer space, and he's talking about how the property market is going to be crashing. And this is just a week after suddenly the property markets were going to start rising again. This week it's like how they're all going to be crashing, and then there was a headline about how interest rates haven't stopped going up here in Australia. And then on the next page, I look at and they're saying how this report that I'm going to talk about today in the US is suggesting that the Reserve Bank of the US is putting a pause on interest rates for a period of time. And for my Australian listeners, that's really important information. So obviously if you're in the US and you're hearing that there's going to be a pause on interest rates, that's a great relief for you, particularly when it comes to the cost of living and managing your week-to-week cash flows. But if you're living in Australia, which is the majority of my audience, then why would I spend a little bit of time looking at what's going on in the US? Well, the simple reason is that they are showing us what is possible with our future. And generally, Australia is lagging with the US. We kind of follow what they do. But this article I'm not going to get into too much detail here, so it might be a bit of a shorter presentation today. But basically what it's showing us is that the US inflation rate from April is only increased by 4.9%, and so that's a lot better than where it was back in June last year, where it was that saying 9.1 last year? I think it was 8.6. There it is, 8.6. So the 11th consecutive month that inflation has slowed. So we haven't seen that here in Australia anywhere near that extent. But as it says, it's a welcome reprieve from the painful shock of persistently high inflation. And so what this is doing is it's getting much, much closer to the target range that governments have got between that 2 to 3% range. So to be all the way down to 4% for the year ending in May. So 4% ending in May. It was down from 4.9 in April. That's a really good indication, and a great drop from that 8.6% level. And it is a year ago at 9.1. So in a year it's gone from a peak of 9.1 now back down to 4, and that's a massive drop. And really good news if you're in Australia to know that it's possible for that inflation number to come down quickly. The thing with the US, obviously, is its interest rate environment is slightly different to ours, but they went pretty aggressive, just like the Australian government has done, the Australian Reserve Bank has done, where they've really crushed lenders with the 12 interest rate rises over 13 months. And hopefully, fingers crossed, what that will do is show us that there is some light at the end of the tunnel if we can just, a lot of these other things that are easy in terms of the supply chain and all that type of stuff. If that flows on into Australia, and with the risk of a recession in the US reducing, takes a little bit of heat out of Australia, and maybe just maybe it will take a little bit of the noise out of the market here in Australia, where we just keep hearing about more and more interest rate rises. And so we've got a whole host of things still to come this year that are going to put a lot of pressure on all types of things. And one of those is a large volume of borrowers who borrowed at fixed rates or locked in fixed rates. They're coming off those fixed rates in September. That's going to put in a huge pressure on their budgets or their household money plans. I hope they've got money plans. They probably don't, but that's going to put a lot of pressure on their ins and outs in terms of cash flow. And I think some of the headlines we're hearing about property at the moment in terms of the potential for a crash, it probably won't be a crash as such, but certainly depressed pricing is coming in September, when these people come off their fixed rates and have to pay almost triple the mortgage payment per month just to keep up with the latest interest rates. So I'm sure there'll be some deals done by banks to reduce some of those rates and ensure that people don't end up having to go down the distress selling path. But unfortunately, when the interest rates go up as rapidly as they have, there's always going to be some roadkill. And unfortunately, it'll be the people who can least afford to be roadkill who'll end up being the roadkill. And it's one of the things that governments don't talk about, is that these interest rate slugs are going to hurt the people that least can afford it. And that is very sad and very unfortunate. And as I've said, there's other things that they probably could have done to rein in inflation, including some of their own wasteful spending. But let's not get political and get ranting. The main point of bringing this one up is that I wanted to highlight that this story is a possibility of some good news coming to Australia, because the US inflation is coming back down, as it says, coming back down to earth. And just to highlight my point, let me just show you what I was talking about here when it comes to the noise in the market. So here's one. Mogul warns Australia's on the brink of collapse. Pretty, fearful. And then if we go a bit further down, that one's not as property related as it looks. Finance guru warns of housing fire sale. So there's two already that are highly emotive. If we scroll down, I think there's another one down here. Block penthouse hits market 300k cheaper. Who cares? Let me see if I can find, there's one more that I think I saw on this page. We get down to, we've gone past it. But even those two at least show you that that there is very different views on what's happening with the property market in Australia to what we probably saw a week or two ago on one of these weekly wisdom videos. So, like I always say, the reason I've started out doing these calls was to show you that there's a risk in getting your news from the media when it comes to making your financial decisions, because one week they'll be saying the property market's going up, the next week it's going to be crashing. And that's no way to run your investment portfolio, is by making decisions off the back of what you're hearing in the media. And I'm sure most of you understand that. So now really we want to use these weekly wisdoms to just highlight some of the things that are going on so that you're forewarned with some of the information that's out there that is a predictor of what's coming down the track. And this one out of the US this week, that they've got their inflation coming down nicely and at a pretty quick clip, is a positive sign that the same could eventually happen in Australia. And let's just hope that that starts to happen quickly. Obviously, we didn't get as high as 8.6 or 9.1, and I think we're currently at 6.8. But I think the Reserve Bank governor would really like to see a dramatic fall below 6% to suggest that the interest rates are having an impact, which we all know they are, but we'd like to see that in the data, and that would then help, just alleviate the pressure on interest rates and the need for any more rate rises. And we've heard them say that with rate rises, they only know they've gone too far after the fact. And hopefully we can get some data pretty quickly that says, look, you've done enough. Let's just put our hands, under our bum for a minute and sit on them when it comes to interest rate rises, so that we don't hurt more people than we need to with these interest rate rises. So hopefully that was helpful. If you are interested in having a conversation about your wealth and how we can help you to accelerate you towards your financial freedom number, reach out, leave us a comment down below. If you're watching this on YouTube, make sure you hit the subscribe button up there. And if you're watching it on Facebook, like, comment and share so that we can make sure more people get to see these weekly wisdoms. And we'll be back again next week dissecting something else, hopefully some good news as well. And as I said, if you want to have a conversation, reach out. We'd love to chat to you, and have a great week. See you again next week. Cheers.